Hi guys, Rebecca here from Empowered Finance. So I've been thinking about doing this kind of subject for a little while, and I've been asked by a peer of mine to actually take on this topic because it's a bit of a forgotten topic, and it's something that needs to be clarified and discussed. So the topic that I'm talking about is people who are self-employed and how easy it is for them to get a home loan these days. Now, I've got quite a few tips regarding this. So what I'm going to do is a bit of a series of videos covering a couple each day for you. So call this my self-employed session, or whatever you want to call it, or however you want to refer to it. But there will be some real good information in here. So please make sure that you watch all the videos. There'll be one each day. And yeah, hope that you get some information out of it. And as always, please feel free to reach out to me and we can discuss offline and have a bit more of a in-depth one-on-one conversation. So, like I said, self-employed people. It used to be a bit of a fallacy, well, not a fallacy, but it used to be quite a bit of a challenge years ago for self-employed people to get home loans. Whereas nowadays there's so many different options, there's so many different lenders out there that specialise in self-employed customers, or just have a bit of a better understanding now of how a self-employed person works and how their income's generated and noted. So, as I said, I wanted to go over a few things. So I'm going to start. So the first thing that I want to have a quick chat about is how long do I need to be self-employed to qualify for a home loan? So to get a self-employed home loan, most lenders require you to be self-employed for at least 2 to 3 years. However, some can consider people who have been self-employed for only 1 year. So that's the first thing to think about. The second thing is, what if I've been self-employed for less than a year? So if you've been self-employed for less than 1 year, there aren't many options, but there are some. Most banks won't lend to you because you don't have tax returns to prove your income and because new businesses have more financial uncertainty. However, one of the lenders that I have access to here at Empowered Finance will look at your income from your last job and take that as proof that you can afford the loan. The reasoning behind this is that if you decide to close your business, you can always return to working for someone else on a similar salary. And on that basis, we can actually help you borrow up to 80% of the property value. Another thing to think about, so the third thing in this video is what if I've been self-employed for 1 to 2 years? So one of our lenders can approve loans for people who have been self-employed for between 1 and 2 years, as long as they have been in the same line of work for some time and have at least 1 year's financials for the new business. So a good example of someone like this is someone who we can help would be a plumber with his own business who has been operating 1 year, who has previously been employed as a plumber for 5 years. So if you're concerned that your employment situation may make you ineligible for a home loan, please don't think that. Let's have a conversation. So I might just cover this last one, and that I'll discuss the next ones in the next video. So what mistakes do banks often make? We often see mistakes in the way that the banks calculate the income for self-employed borrowers. So for complex loans, we make extensive notes, and if need be, call the assessor and walk them through the financials to ensure that they assess the loan correctly. The most common mistakes we see are a lack of understanding. So complex trust structures, actually can say those words, with multiple companies and trusts are often handled by bank staff that lack the experience to understand what's happening with your income. Or if you're using income protection payments. In these cases, we talk to your accountant and then speak to the assessor to ensure they understand exactly what's going on. Double dipping. So this is where the lender takes an income into account twice. For example, net profit before tax, and accepts the dividend paid to a director. or takes an expense into account twice, for example, forgetting to add back interest on loans. Company car. So lenders regularly ignore the benefit a self-employed person receives from tax deducting their car expenses in their company. We always draw their attention to this in our notes. I promise you. Procrastination. So technically this isn't an error as it's done on purpose. If your loan is particularly complicated, we find that bank staff may take their time to get your application. We usually speak to management and ask them to assign your loan to an experienced assessor who will enjoy the challenge of a complicated application. I'll leave it here and I will come back to you tomorrow with another video specifying some other things with regards to self-employed people looking to get a home loan. I hope you have a great day and I hope this video gives you a bit more insight and helps you out. If you want to have a chat, please feel free to reach out and we're going to have a one-on-one conversation. Have a great day.